Happy Women's Day, ladies. It is not over, not as yet. We still celebrate us for the rest of the month. Good morning, everybody. Welcome to this finance webinar that Proudly South African and all our stakeholders have put together this morning. We thank you for your time, and we thank you that you heeded our call and responded very positively to the session this morning. My name is Happy Ngidi. I am the Chief Marketing Officer at Proudly South African, but I'm also your Program Director this morning. Happy Women's Day, ladies. It is not over, not by a long shot. We still celebrate ourselves. We'll be still being celebrated for at least the end of the month, and even beyond for that matter. Happy Women's Day. I'm hoping that you're having a great month. Welcome, everybody. Welcome to our speakers. Thank you so much for being with us this morning. Thank you to our CEO, who's one of our speakers. Thank you to all our delegates that have joined us this morning. Thank you to our stakeholders, member companies, and media that has joined us this morning. So the flow of the program is going to be as follows. So we will have two standalone speakers, and then the rest of the session will be a panel discussion, presentations from the panelists rather. And then depending on how we're doing on time, we will take questions, especially for the first two speakers, but if we don't have enough time, we will then take all the questions and answers at the end of the session. So just so you know, speakers, I went on to Kaya FM yesterday to talk about the session today, and I did promise on air that this session is a place to be for business owners, for entrepreneurs, for SMMEs, and I did promise that it is a solution-driven session, and I have no doubt, given the caliber of speakers we have here today, I have no doubt that we will walk away in this session having made a difference in many businesses that are trying to stay afloat and sort out their businesses given the challenges that they're facing. So why are we here today? It goes without saying that we've local businesses, small businesses, big businesses, SMMEs, entrepreneurs have really gone through a very difficult time due to the pandemic. But we also know that our economy as a country was in trouble long before the pandemic started. The pandemic, COVID-19, is just really the final nail in the coffin. So hence we saw the need as Proudly South African to create this platform and put together, businesses and stakeholders with funding programs in place that can really make a difference and try and help the businesses that are struggling. So this is the purpose of this session. But with that said, gives me great pleasure to invite our first speaker, who is the CEO of Proudly South African, Mr. Eustace Mashimbe, who will take you through Proudly South African's response to COVID-19, how we've assumed responsibility and how we've decided that, how we, play our part and step in when it's, most needed. And he will take you through what type of work we've done in the last few months. Mr. Mashimbe, are you here? Welcome, sir.
I'm here. I don't know if you can see my presentation though.
Yes, we can. Thank you. Please go ahead.
Thank you very much. My role this morning is to introduce you to Proudly South African and give you a sense of who we are within the bigger scheme of this economy, and what our role is and what our mandate is, and most importantly, why in the course of doing our work, we put together events like this. So mine is not too long because I think we are all on the line just to get a sense of what funding relief programs are out there. So let me get to it quickly. The reason why PartySouth can exist is because the country battles three main challenges: inequality, unemployment, and poverty. And we all know someone is unemployed. We know that there are households that battle to food on the table. A lot of our people are living below the poverty line. And if you look at the unemployment numbers that came out at the end of, that came out for the period ending March 2020, you see that unemployment rate in South Africa is currently standing at 30.1%. which is the highest level of unemployment for the country post-democracy. We have in total 7.1 million people who remain unemployed, who are still trying to find jobs but are not able to. And if you look at those who are discouraged and have stopped looking, that adds another 2.9 million people. So in a country with a population estimated to be 59 million people, about 10 million people who should otherwise be employed are not employed. So if you look at the expanded definition of unemployment, which takes into account the 2.9 million people who are discouraged, you are looking at about 39.7% of our people are unemployed. And in terms of gender, women account for 31% of those who are unemployed. And if you look at the youth, 59% of our youth remains unemployed. So it is a challenge that needs to be addressed. And one of the ways in which you can address it is by ensuring that you have a thriving SMME industry, thriving SMMEs, because if you look at developed economies, about 90% of their GDP is contributed by SMMEs and small businesses and micro and medium enterprises. But if you compare that with South Africa, we are still way below that number. And in fact, the target for 2030 as contained in the National Development Plan sits at 45%. So we're still trying to get to 45% by the year 2030. So we're lagging behind when you compare us with developed economies. So you need SMMEs to thrive so that they can create jobs on the ground. Think of the communities where you come from. A lot of the jobs are created in small businesses. A lot of people are employed in those enterprises and entities that operate within your communities. Some of the challenges that are encountered by SMMEs and business people includes the ability to attract customers, how to remain profitable, and how to continue to increase your revenue so that you can stay afloat and you can be profitable, because everyone goes into business with the objective of making money. And so businesses have to strive to increase their revenue. Uncertainty over economic conditions is something that also affects SMMEs on a day-to-day basis. And the next one, which is part of the main conversation rather for today's forum, is how to secure financing for you to expand or to even stay afloat. So these 5 challenges can be addressed through 3 ways as identified by those who specialize in this space, and fortunately there are speakers, especially from a policy level, from the GTIC and from Department of Small Business, who can tell you about some of the programs that they have over and above what our other colleagues from ABSA and IDC will tell you about. It includes access to information and access to finance, which is why we are here today, as well as access to markets, which is what Party South Africa is responsible for. And by access to markets, we mean access to the consumers that you're targeting, but also, depending on what your offering is, it's access to the private sector procurement as well as public sector procurement. And that is why the mandate of Party South Africa is to make sure that we increase demand for locally made products. We influence the buying that happens so that it's in favor of locally made products. So those who buy in the private sector, in the public sector, as well as ordinary consumers who buy for their own households, choose locally made products every time they make purchasing decisions. And so our 4 focus areas are exactly those that you have on screen. One is the public sector procurement. We have to ensure that when government buys, they buy that which is locally made. There's even legislation in place, and I'll talk about that briefly, that talks to how government must procure, and I will demonstrate to you the role that we play in that space to ensure that every time government buys, they buy locally made products as best as possible. We also do the same in the private sector, and I have a slide that takes you through what we do in the private sector to ensure that organized business and those in the private sector buy and choose locally made products when they buy. We also have a role to play in terms of educating consumers on the importance and the economic impact of buying local, because some might not necessarily understand that when you buy local, the spin-offs are that those businesses will stay afloat because then they have customers, so they will be able to retain the jobs they have. But as demand for the products that they need to produce grows, or the service that they need to render grows, they might be in a position to can employ more people, and so jobs are retained and new jobs are created. And that is the role of Proudly South African. We also increase accessibility of locally made products and services so that anyone who wants to heed our call and wants to respond to our call for them to buy local knows where to find the locally made products. And I have a few examples that I'll give to you. And so it's a global phenomenon. It's not unique to South Africa. Buying local is something that happens all over the world. Developed economies that seek to grow their own economies, make sure that their own people are employed, use this buy local phenomenon and practice. And so if you look at the economies like the United States, as far back as 1933, they developed legislation known as the Buy American Act. And they followed that up in 1982, a couple of decades later, with the Buy America Act. And they then issued an amendment or an improvement to that act in 2017. So developed economies and powerful economies like the US are doing it because they want to protect their own industries, especially industries that are labor intensive and are able to absorb as many of their people as possible. So the trade wars between the US and China are mostly because the US is saying that if they're able to produce anything themselves, they will not allow any Chinese product to come in through their borders because they want to protect those industries. And so if you look at pre-COVID-19, before COVID-19 hit the world and all economies started going into regression mode, you had the US with a population of 329 million people sitting only with 3.6% unemployment. So only 5.9 million people were unemployed. Compare that with the 7.1 million people during the same period in South Africa, where we only have 59 million people living in South Africa. So we're not doing well, but these countries like this, because of their trade policies, because of their economic policies, they are able to create jobs for a lot of their people. The same as China. Look at the graph for China. It's the same as the previous graph for the US, where it keeps going down. And as of January 2019, and that's why I've given numbers before COVID-19 hit any of the economies, that show that with a population of 1.4 billion people living in that country, but they only had unemployment sitting at 3.6%. Because they've positioned themselves as factories for the world, but if there's a product that they are going to consume as a country, they will not buy it from anyone who seeks to bring it into their country because they want to protect their jobs. So that's why buying local is important. So how to become a member of Proudly South African and participate in our programs is that you need to conform with these 4 key criteria. 1, your product must be locally made. It must contain sufficient local content. So whether you're rendering a service or you're producing a product, you need to do so using locally sourced raw material or equipment. So if you're rendering a service, the equipment that you use in your business to render that service must be sourced locally as best as possible where it's available. The raw materials that you use to produce the product must be sourced locally. In instances where the raw materials that you require to produce the products that you want to take into the market are not available. So where the raw materials are not available in South Africa, you need to bring them in, but convert them within the borders of South Africa so that we make sure that there are jobs created within this economy. So that's important, that we don't want finished products to come into the country and carry the Proudly South African logo, because then it misleads those who consume the product into thinking that it was made here and that the economy of South Africa benefited wholly. Secondly, the product must be of a high quality nature. The tick on the Proudly South African logo that you see on your screen, the green tick represents quality. It tells the consumer or the end user that the product being sold or the service being rendered is of a high quality nature. It will meet the needs and satisfy the need for which it is bought. And that is important, that every time consumers interact with a Proudly South African, with a product that carries the Proudly South African logo, that they know that it's made locally and is of a high quality nature. The other thing that we look at is whether companies that affiliate with us implement sound environmental standards in the course of doing business. Do they recycle and reuse material? Do they have environmental policies that help us preserve the environment? Do they dispose of their waste responsibly and ensure that we can preserve the environment even in the course of doing business? The last one is to ensure that companies that affiliate with us treat their workers fairly and they comply with the labor legislation of the country. There's perception out there that the membership of Quality South African is expensive, and it's not. It's 500 rands for enterprises with turnover less than 5 million rands. So anything between 1 rand and 5 million rands, you pay 500 rands per annum. And with turnover between 5 million and 10 million is 1,000 rands. And the most that any entity that wants to affiliate with us ever has to pay is 100,000 rands, and those are entities with turnover of 100 million rands and more. So it's really not expensive, especially if you look at the benefits that I'll touch on quickly before I conclude. The first benefit that is important is the use of the Proudly SA logo. You get the right to use the Proudly SA logo on your product, on your letterhead, on your website, on your vehicles, on anything that you put out there. Any corporate material, any of your collateral that you take to the public, you can use the logo to identify your product and your business as a company that supports the local economy, produces products locally, renders services using locally made equipment, and more than anything that is of a high quality nature, and that you live by the ethos of Quality South African. The other big benefit, which I'll skip because I have other slides that talk to it, is access to market platforms. So as a member of Quality South African, we expose we help you expose your product to those that are in a position to can buy. So some of the markets that we expose you to are in the public sector. And in the public sector, we rely on the database that we have, as well as legislation that exists in the public sector. So the legislation says that if government buys any of the products that are designated, so government has designated a few products, and I'll give you a quick examples of what they've designated, and I've chosen one. But all of it is built on the back of the fact that the country has capacity to produce this product. So government is saying if we buy furniture or clothing and textiles and some of those things, we are going to buy them from companies that make the products locally. So government has designated items. What we have done is we've integrated our database with the central supply database so that as a member of Quality South African, once that integration goes live in the next couple of weeks, you are then able to do business with government, because government only buys from people who are registered on the CSD. So government has designated items, and the example that I'll use here is furniture. So let's say government wants to issue a tender for furniture or transformers or any of those. They will then advertise the procurement opportunity or the tender or the RFP. And what we do is we have a tender monitoring system that helps us track the tenders for designated items. The big talk currently is PPE. So government, if it buys any of those PPE that it requires for healthcare workers, frontline healthcare workers, they need to ensure that the tender comes out with a provision that says they will only buy from locally made. They will only buy locally made products. So even if they buy from you as a tenderpreneur, as a middleman, they must buy products that are locally made. So our tender monitoring system enables us to track those tenders. So using my example for furniture, if they issue a tender for furniture, the tender must say they will only buy locally made furniture. So we find the tenders, we identify manufacturers in our books that we send the tenders to, and we say, dear company A, when you registered with us, we vetted you as a furniture manufacturer. Here's a tender for office furniture. Please respond to it. So we are helping you find tenders when you might have missed them. But what we're doing, because we track the tenders and then we engage with government and we get them to correct the tenders at the time when they're issued, we're helping them correct the tenders where the tenders are not compliant. So this helps government to buy from local producers, and that's what we do in the space. We help find the tenders, help government ensure that they only buy locally made products, and it secure the opportunity for local producers. As a member of Quality South African, you will receive the tenders from us because on a daily basis we track the tenders and we send it to our members. In the private sector, we rely on our database of companies that are vetted for quality and local content. So giving an assurance as Quality South African to the private sector that they can trust our members, they can buy from them. And what we do is we look for localization commitments. So we go into the private sector and we ask the private sector to give us a commitment. So let's use my furniture example again. We'll say to the banks, can you give us commitments? We have our friends from ABSA on the line. That's one of the commitments that they've made to us, that they will endeavor to buy furniture locally. So as a private sector entity, and this is just not limited just to to the banks and furniture. This is just one example where they will then say they will buy furniture locally. Once the opportunity for bidding for those opportunities comes up, we then find members on our database that we can send we can send the list of those companies to the bank. So we'll say to ABSA, here's a company of furniture manufacturers that you can buy from in line with the commitment where you've ring-fenced furniture as an item that you will buy locally. So we send them the list of companies. The banks and the furniture manufacturers will then transact. And what we are responsible for as Prowly South African is to conduct a monitoring process that helps us to constantly evaluate the service levels to ensure that if the bank has chosen to buy locally made furniture, is the supplier delivering according to required standards, so that we help companies improve, but we also give an assurance to the corporates that are giving us this commitment that they will continue to buy from companies that will supply them good quality. This is just a slide that gives you quick examples. I won't spend too much time on it because I'm almost out of time. The first example of how we get commitments from the private sector to secure opportunities for members of Prowly South African. The first one is an example that I gave where the banks have committed to buy locally made furniture. The second one is where retailers like Edcon, over time, despite what they're going through, over time since 2015, when we started engaging with them up to late 2019, they were increasing their levels of local content, which means they were buying more locally made products, and they were placing their orders from local factories as opposed to buying from China and everywhere else where they used to buy in the past. So as you walk into those retail spaces, you are going to find locally made products and more levels of local content in those stores. So the same goes for Mr. Price, same goes for the Foschini Group, and we're doing that also with furniture retailers. We are not talking to the FMCG retailers that when you go into those retail spaces, you find local content. But the advantage is that there are jobs now being created in those factories that are going to supply the furniture or the clothing and footwear that goes into these retail spaces. We also advocate for the buying of raw materials from by factories or by big businesses, from small players. So for example, the commitment from Coca-Cola Beverages and from SAB is that they will buy their raw materials from farmers who grow their maize, their barley, their hops locally, and they will source sugar locally. So we're securing opportunities for local producers through this engagement. We're also talking to the franchises, where we spoke to Franchise Association to give us access to their franchises, so that every time a franchise has to source, they know that on their database there is a list of local producers that they can buy from. And because they've been vetted by Prowly South African, they can trust that the service levels will be right and that the products will indeed come from local sources. We also have an online store, which is another access to market opportunity for you as a business person. You can list your product on this platform and be able to sell your products on there at no cost. This seeks to ensure that for those of you who have products that can be sold on online platforms, because you can see technology and online shopping is the way to go these days. So as a member of Prowly South African, you can sell a product on there. And the assurance it gives consumers is that every time they buy a product on rsamade.co.za, that the product is locally made, is of high quality nature, and has been vetted by Prowly South African. So in the same way as you will buy on any other online platform, you're able to buy on RSA Made and find products that you're looking for and know that you're contributing to the growth of the economy. The other thing that we do, as I conclude, is we have a role to educate consumers, like I said earlier. And so what we've done is we've come up with a campaign called Game Time. So in the interest of time, I won't necessarily go into what the campaign entails, but it's a campaign that will live on multiple platforms, on TV, on digital platforms, on social media platforms, and there's a radio version of the ad. But I think when I play the ad, it will give you a good sense of of what the campaign entails. So maybe let me play the ad, and you can get an idea if you have not seen it already, because it's been on SABC, on ETV, and on MultiChoice. Okay, so I hear that there's an issue with the sound. I'm trying to put that out. Sorry, apologies for that. Okay, let's hope you can hear the sound now.
The second half is about to begin. We need to change the scoreboard. It's time for all of us to pause and rethink the game plan in order to save the future. I call on all of us to be game changers because greatness isn't reserved only for some people. By buying local, we're choosing to create jobs and sustain the ones we have. Time and time again, South Africans have taken destiny into their own hands, creating products that the rest of the world wanted to buy. See, the world remembers about us, what we sometimes forget. But it's time for change. Let's all buy local. It's game time. Zanzi.
Local is lekker.
Your everyday decisions shape our future.
And that is a campaign. So we urge South Africans to respond to the call to action from our own president, the King of Wakanda, who's calling on all of us to buy local in order to create jobs. Lastly, during this time, as business people, you know that you have to implement, certain precautionary measures within your businesses, including ensuring that all your employees have masks, that you have sanitizers, that you have disinfectants. And what we've done is we have created portals so that those of you looking to buy these products, but knowing that you're buying locally made products and can use that procurement spend to support the economy, know where to find these companies. You can go onto a Proudly SA website, proudlysa.co.za. There you'll be able to find masks, sanitizers, detergents, disinfectants, as well as face shields, which is the latest offering that members of Proudly South Africa have put up. So we've traveled the length and breadth of the world to find suppliers who can supply this, the length and breadth of the country rather, to find suppliers who can supply this for us. So you have companies from all over the country. You can buy from a supplier in your town, in your neighborhood, and make sure that the spend on mask sanitizers and face shields is helping grow the economy and sustain jobs. And that is the call from Proudly South African, that those of you who are in the space who are making masks, who've repurposed your businesses, that you join Proudly South African so that we can then help you list your products on our portal, because what we are doing is we're driving the private sector to buy off this portal. Yesterday, we reached more than 1,000 establishments, I was told, B&Bs, lodges, hotels, guest houses, who are opening up as a result of the new level 2 regulations. And as they open up, it gives them an opportunity to support the economy by buying these things that they require from local producers. So thank you very much. That's my presentation, and I hope those of you who want to take up membership or not necessarily members can make contact with us, info@proudlysa.co.za, and we will be able to assist you. Thank you very much, Program Director.
Thank you very much, CEO. Much appreciated. And just to quickly go to the commercial that you played, so that new campaign is very close to our hearts. It resonates with many South Africans. For those of you who've seen the commercial on television, I would imagine that they would agree with the fact that it's very emotive. It makes you think for a second, and we couldn't have chosen a great South African to tell our story for us and to help us spread that message as wide as possible. So he says, time and time again, South Africans have taken destiny into their own hands. And, with that said, nothing stops us from doing the same thing, given the current situation that we find ourselves as a people, as businesses, as South Africans, to take destiny into our own hands, because if we don't, who must do it for us? Thank you very much, Eustace, for your presentation. And I urge the the delegates who are in this session to please jot down your questions, and towards the end of the program we will have a Q&A session, so jot down as much as you can. So moving right along, I'd like to welcome our next speaker, Mr. Oscar Siziba, who is from ABSA, a friend of the campaign, the Managing Executive, Regional Coverage, Relationship Banking at ABSA for the Gauteng Province and Limpopo Province. A pretty mouthful, that Mr. Siziba. Thank you so much for joining us this morning, and thank you for accepting our invitation to partner with us and be one of our speakers this morning. Over to you. Welcome. Mr. Siziba, are you there? We may have technical glitches. Mr. Siziba is here because we did have a dry run this morning with all the speakers. There we go. There's his presentation on the screen. Thank you so much. Say, go ahead.
Thank you so much, Program Director, and thank you so much for the opening, and to our CEO and our delegates on the line. It's really a great privilege for us to be part of this session and engagement. We're extremely proud to be part of the session today as ABSA. And more importantly, I think since the beginning of COVID, we have seen many businesses facing a lot of challenges. Many businesses have closed down, and a lot of people in our country have lost jobs, and that trend will continue. And to solve that, as ABSA, we have made some conscious decisions around what are these options. What are some of the things that we need to change in our business to make sure that we support our SMEs, we support our businesses, we support individuals who are the entrepreneurs that are running this business throughout this period and post this period. What has become very clear for us as an organization, firstly, Program Director, is to look inside ourselves and look at our processes, our policies, our credit approach, our channels, and revive all of those to be relevant to support our businesses and individuals during this tough period. And that has been a great lesson, and we acknowledge that the fight to survive during COVID and post-COVID and in the future is really a fight of really partnering with everyone that has got the same goal. So what I have prepared for our guest is really a small, trip on things that we are doing at ABSA, and which I think probably all other banks do, but at ABSA we are very deliberate and direct in terms of some of the things that we're doing. But our commitment, as the CEO had indicated, in terms of supporting local produced, local services, and also making sure that our procurement process as ABSA is in line with what Proud SA is trying to drive. I can confirm, CEO, that we are committed. Nothing has changed on this journey. We are going to go stronger and stronger on this journey. Really, the slide that I wanted to really share firstly, before getting into the actual solutions and looking at what are the funding opportunities, because one of the things that has become very clear is funding is not a problem. The issue is, do we have businesses that are ready to get funding and use funding to survive? It is the access to the market, which the CEO spoke about at length. And I think what's important in this particular slide I've put up is really making sure that our customers out there, they have an easy roadmap of what is available in South Africa, not only in ABSA, in South Africa, for them to be able not only to get through the COVID period, but to survive going out in future. And there are very specific things that we're doing in ABSA. There are very specific partnerships that we have, which I'll cover shortly, with different role players, including government or agencies and other private businesses, in an effort to make sure that our SMEs and our businesses in general get to a space of survival and succeed in future. We will not win this war as individuals. We will win this war as teams, and banks and ourselves as ABSA, part of the financial institutions, play a very critical role in making sure that our businesses survive. I must stress this to our guests, that good business will always be supported by ABSA. Good businesses is not a tender. A tender is an opportunity of a business that has already been established, that is clear on what its core goal and what is clear of what its core responsibilities are, and is supported by a strong entrepreneur who believes in that particular businesses. Those are some of the new thinking that we have as ABSA when it comes to these businesses. We back the jockey, we back a sustainable businesses in all of support we have, whether it is financial support, whether it is non-financial support, and in some of this non-financial support, our partners that I've put up on the screen play a critical role, and they support us and support those businesses to find opportunities. At ABSA specifically, we have been very deliberate, first of all, to say we'll provide relief. And I must say relief is a word that should not be abused. It gives you a breather during this period when you are able to get on your feet. You rely on the sustainability of your businesses. We look also at long-term support to our businesses, meaning things such as working capital becomes extremely important. And I must say to our guests and to our SMEs and entrepreneurs and businesses out there, that some of the key failures or drivers of failures has been the inability of our entrepreneurs, businesses, and managers of businesses to manage cash. Cash is king. Cash is the oxygen of the businesses. If you slightly open up and you start losing blood, you will likely gonna lose a profitable businesses. There's two different worlds. We're now looking mainly during this COVID period on the cash side, which is the working capital side, to keep our businesses oxygened, if there's a term like that, program director, and be able to sustain this period. It is not the profitability that kicks in. You have to be cash flow driven and be able to manage your cost now and be able to sustain this period and possibly be able to get over the curve and over the mountain and start running your businesses. We are very clear on some of the things that we're doing. We are there to support you on asset finance, really looking at businesses that looking at assets. You need to review your assets that you have and ask yourself whether these assets are relevant and essential for your businesses. You need to start thinking about what products and services are these assets generating, and whether those services are essential services. That means they have people that need them and the people that use them. And if not, change your line. Do not be emotionally attached on what you are doing, even if it's now and in future no longer relevant. You need to change the line and start saying, can I produce this because this is what my customers want? This time around, it is important for our businesses to stay close to their customers. You need to make sure that you are able to digitally link up with your customers, engage with your customers, understand that what they want, and then come to the banks, come to us and say, for me to be able to provide these services that my customers want, this is what I'm looking for. What's extremely important, it is the different types of solutions we have. I've spoken about the commercial asset finance. Do not buy assets on cash, because you need the cash to generate more and more of what you need to produce and sell. meaning managing your working capital becomes extremely important. Some of these assets might have a long tenure or a short tenure. You need to be very clear as an entrepreneur how you look at that and come to banks, and will assist you in understanding what type of asset finance you need to do that. We have seen people also recently, as the CEO has shared, and I also listened to our program director yesterday talking at 702, where you find people starting to sell assets to try and keep the business running on working capital. It is not sustainable. And I always use an example to say, if you are in the space of looking for rental money and you sell a fridge and you sell a TV, you might not have a TV in the next month to sell or a fridge to sell. It is extremely important that the type of finance suits the type of your needs. On the mortgage-backed business loans, it's extremely important that some instances we have been able to say to customers, we understand you need to pay out your loans during the next 3 months, take a breather. But more importantly is that instead of you paying rent, we also encourage businesses to buy their own businesses that they're operating on. And what's important in here for us is we are no longer looking at the security and all of those things. We're looking at the cash flow that you are able to save on the rental, whether you can service the loan that you're looking for. At the end of that, you are able now to own an asset out of your own businesses. But what is important during this period is to be able to look at those businesses that have those type of facilities and say, can we give them an opportunity to take a breather and see? We have also worked with government a lot, as all other banks have, in terms of the government guarantee scheme, which some of my colleagues will talk in length about it. But we were in the forefront in conversation with our partners and regulator in here, and we're very clear that we invite our customers to really look at this particular support from the government, supporting us as banks to make sure that the approach we take on the SME side is not a too risk or stringent approach, but it's a support that gives SMEs lifeline to survive and be able to grow their businesses. It's doing exceptionally well. Our businesses have come in numbers, and I must say, all of these things need businesses that are sustainable. If you are already in trouble pre-COVID, these initiatives will not assist you. They will get you into big trouble and big debt, and you might not have the businesses that you aspire for. There are other things that you need to look at. That means revising your approach, looking at your processes, revisiting your strategy, revisiting your client base, and then you can start looking at some of these support options. In closing, there's a whole lot of baskets of support that we provide to our customers in terms of facilities. I would like to emphasize the issue around working capital. It is very simple. I know it's a big word, but for me as an SME, and for you as an SME, and for you as a business person, this is one element that you need to manage with care, with passion, with getting yourself dirty and hands-on, and you need to stay close. You need to manage your stock. You need to manage your creditors. You need to understand what you need to borrow. And you need to keep this cycle moving, buying, selling, buying, selling, buying, selling. You will have enough oxygen, not only to get through this period, but to sustain and continue to grow. And more importantly is your customers that you have there. Our digital platforms are very much bespoke to you as a SME in terms of the options you have. I have realized, Program Director and our CEO and all our guests, that it was a really struggle for us, me personally, and for the rest of our businesses not to visit you as our customer. But I can tell you now, I have engaged more with our customers than I've ever done when I had to make appointments, drive to them. Now I'm on a webinar, I'm on Microsoft, and I can easily offer you facilities without even seeing you. It's the same for you as an SME. You stay close digital with your customers, you will have a future businesses. And I think in closing, ABSA is open to support you, and we're open for partnership as we have with Proud SA. It is our ambition to support the SME. It is a calling for ABSA because we know that the SME space is the SME that will give us the opportunity not only to drive the growth in the economy, but to deal with poverty and unemployment in our country. Thank you so much, Program Director, and thank you so much for the invitation, CEO, and for our guests, really good luck in this journey. You have ABSA, you are not alone. Thank you. It is called Africanacity, finding ways to survive in the best way an African business that has always done in the future, and that's us. Thank you.
Thank you so much, Ms. Ziba. This is, very, very impactful, and there's so much that you've shared with us through this session. Just to throw you under the bus a little bit, you do know that you are now a partner for life, right? At Proudly South African. Actually, not even a partner, a friend of ours as ABSA. Because there's quite a number of things that we've done with you and we're doing with you going forward, that we are hoping to do with you going forward. Thank you so much. Take out for me from your presentation two things. You mentioned that selling assets to try and save your business may not be sustainable. And you made reference to the interview that you heard yesterday where the presenter was mentioning the kind of like the same thing where he was saying, I think he was making reference to a business owner who's a shipping owner who sold his car to try and save the business. So, it's actually important what you've just said now, that may not have been the right approach, but with that said, I think if you're in a position like that as a business person where you see things falling apart, you try by all means to try and pick up the pieces as best as you can, and and because nothing makes sense at the time, you really try to do the best you can, but the best you're trying to do may not be the best. And I thought that was a very critical point that you're making, which brings me to my next point that, if your business was already in trouble before COVID-19, these financial finance programs that we are going through and we are talking about today may not be necessary, may not rather be helpful to you as a business if your business was in trouble before COVID-19. We all know that the economy was in trouble before COVID-19. So these programs that we are going through today may not be what you're looking for. And the reality is that it's okay to embrace reality, and it's okay to admit, if this today, you walk away from this today and you're thinking, this might not be what I'm looking for, by virtue of the fact that your business was already in trouble. But with that said, there's always other solutions that can help you get your business to where it needs to be as you walk this journey of uncertainty and these unprecedented times that we find ourselves as businesses. Thank you so much, Mr. Ziba. Please hang in there, because I would imagine that there's one or two questions from the audience. Moving along, it gives me great pleasure now to welcome our next speaker, which is a friend of the campaign in the true sense of the word, Ms. Tshepiso Makgoti, who is Chief Director, Strategic Partnership and Customer Care, Industrial Financing Branch from the DTI. Tshepiso, welcome. Great to see you here today. Thank you so much, Tshepiso. You can go ahead.
Thank you very much, Program Director. I don't know whether you can hear me clearly.
Yes, we can. Please go ahead. You're loud and clear.
Okay. Thank you very much. Can you see me?
Yes, we can see you too in your proudly South African made bini.
All right, thank you. Thank you very much. We know that, as it has already been mentioned, that small businesses are the backbone of the South African economy, providing majority of job opportunities. And for small businesses to be able to survive and grow, it's important that a sustainable and supportive environment has to be created. But one of the biggest things that businesses have is the challenge of funding. And it is crucial that at a time like this, when we are grappling with COVID-19 over and above other problems that the economy have, we can already see that some companies are closing, others are shedding jobs. And while this is happening, luckily, there are those that are still hanging there to provide support that is required. And they are only able to do that when we, as government departments and development finance institutions and banks in general, are able to provide them with funding. And the companies are requiring this type of support at a time when South Africa is experiencing low growth, high unemployment, and a range of many other social challenges, COVID-19 being the one on top of the list, but many others that the country is facing. And it is with this background that the Department of Trade, Industry and Competition, in partnership with the Industrial Development Corporation, National Empowerment Fund and Small Enterprise Financing Agency, established a 700 million rand industrial financing facility to assist manufacturers of identified critical goods that are affected by the outbreak of COVID-19, with a loan finance for machinery, equipment, working capital, at a very reasonable fixed rate of 2.5%. I will talk about the division that I come from, the one from industrial financing, where really our responsibility is to grow this sustainable competitive enterprises through accessible industrial finance. The work that we do is, divided into various clusters, and in each cluster you find that there are incentives, because over and above the fund that has been established by the DTI with these other development finance agencies, we have incentives that we still offer at the DTIC. Under, for instance, the manufacturing cluster, we have the Black Industrialist Scheme. I will skip the auto, which is not relevant for this purpose. We have agro-processing support scheme, because there are certain things that COVID-19 companies require that fall under agro-processing. And we have the strategic partnership program that is also relevant. I will just skip a number of these slides and focus on the ones that the COVID-19 companies can apply for directly from the DTI. This is the Black Industrialist Scheme, where the DTI really partners with Black-owned companies and make sure that they are brought into the economy. And what are these Black industrialists? They are 51% Black-owned, have a valid BEE certificate, and are directly involved in the day-to-day running of their organizations. And to qualify for this, the project that will be required will be about 50 million. When we come to the agro-processing support scheme, really will be stimulating investment in agro-processing with the intention of increasing capacity, in creating employment, and coming up with modernized machinery and equipment over and above other competitiveness and productivity improvement activities. And in this regard, we are focusing on food and beverage and other things that would be required under this circumstances. And this type of incentive really, it's 20% to 30% of the costs to a maximum of 20 million. I will not go further into the other incentives because I was just focusing on the ones that are relevant for COVID. But at the same time, as government and through the DTIC, we are partnering with a large private sector companies with a turnover of a minimum of 100 million, where we support SMEs to be part of the value chain of the big companies. We nurture them, support them, develop them, incubate them, and make sure that they can participate in the supply chain of the bigger companies. And I will skip the other incentives that are there, but at the same time, it's important that for us as business people to invest in whatever business we want to invest in, there's critical infrastructure that we also provide funding for, so that businesses are able to invest, whether in new businesses or they are expanding their businesses. It's important that critical infrastructure is provided for them to be able to invest and, you know, assist in as much as possible. It's also important that when some of these businesses locate in our special economic zones, they derive benefits from the various tax benefits that are offered for locating in those special economic zones. This is just to indicate where the special economic zones are, and for people who are locating or who are already located or who wish to locate there, there are, you know, benefits that they will derive from locating in those areas. The way in which we operate is that applications are sent to the DTIC and they are acknowledged. And if everything is complete, documentation is complete, after evaluation, a letter will be sent out indicating that whatever documents is outstanding should be sent. Otherwise, it goes for adjudication, where it sits before the committee and the applications are approved, rejected, or referred back for clarification. And the applicants are given an opportunity, if, for instance, the decision is not very positive, to appeal within a period of 30 days. And in terms of the DTI incentives that I've made reference to, we can contact the DTI via the incentives at the dti.gov.za or telephone 012-394-1255. But having said that, on conclusion, I can indicate that the coordinators can easily provide you with my contact details, so that for any one of the business people who may wish to contact the DTI because their firms are in distress, or because of specific questions that they may have, they can contact us directly, so that we can connect them with the relevant offices in the NEF, in CIFA, and in IDC. Thank you very much. I thank you.
Thank you. Thank you so much, Osipiso. Very insightful. Thank you. I do have 1 or 2 questions for you for later, though, so please hang in there. I will move right along and to our next speaker, who is from the Department of Small Business Development, and that is Mr. Philip Pasha. Mr. Pasha, are you ready for us? Just while we're connecting Mr. Pasha, just to remind our delegates to please send your questions on the live event question and answer platform. You know, as we go along, and towards the end of the program, once everybody, all the speakers have spoken, we will then take your questions and get the speakers to answer. Are we ready? Back end with Mr. Pasha's presentation. Mr. Pasha is from the from the Small Business Development Department. While we wait we seem to have technical glitches, but Mr. Ziba, there is a question that I would like you to jot down, where somebody wanted to know that you said that the companies who are in the red will not qualify for your program, your finance program, is a question they would like to know. What I'm not getting from the question is whether they were in trouble before COVID-19, because my understanding is that this program is specifically, put together for businesses that got into trouble during this period. I think we are ready with Mr. Pasha. Please go ahead, sir. Welcome.
Thank you very much, Program Director. Good afternoon to everyone. My name is Philip Pasha. I'm from the Department of Small Business Development. So I'll be sharing with you the programs that the department has designed to assist SMMEs to be competitive and sustainable, and also navigate through the COVID-19 pandemic. So this is the presentation outline. I'm not going to go through it. So the purpose of the presentation is to share information about interventions that have been introduced as part of the SMME COVID-19 relief measures to assist SMMEs that were impacted negatively by COVID-19, and also to share information about DSPD economic recovery intervention aimed at supporting SMMEs to recover post a lockdown, so that they maintain and create job opportunities, they are profitable, and also contribute meaningfully to the current tax base. So to also share with the audience interventions that are available at the DSPD for informal businesses. Here we're talking a bit about businesses that are considered to be macro and they are not registered. So we have designed a number of programs to assist them to ensure that they graduate from the informal status to participate in the mainstream economy and contribute meaningfully to job creation, reduction of poverty and inequality. So this is how the department is configured. We are having our agencies, small enterprise finance agency, as well as small enterprise development agency, SETA. So as the national department, we are responsible for the provision of policy direction, strategic direction, monitoring and evaluation, and as well as a program design So our agencies, CIFA and CITA, they are responsible for the implementation of our programs. So the aim of our programs, one is to relieve that burden of SMMEs through SMME debt relief scheme, also ensure that businesses are viable from the financial and commercial side, also strengthen domestic demand through localization or import substitution by making sure that products that are produced by SMMEs are consumed locally, and also support and restructure the informal business so that there are more participants in the informal economy, and then also assist them in terms of business development services and the financial support so that they graduate from being informal to formal businesses. So in terms of the SMME that relief facility, this was introduced by the department to assist companies or SMMEs that were impacted negatively by COVID-19 pandemic. So the type of assistance that can be accessed under SMME Debt Relief Facility 1 is payroll assistance, where we assist employers with employees do not qualify for UIF relief. Rental assistance, where we were assisting SMMEs to pay their rental to meet their rental obligation for, and also purchase working tools, facilities, as well as the payment for business premises, and also to pay their municipal bills, so that we alleviate pressure from municipalities who are facing severe financial constraints and enable them to continue to deliver basic services. So in terms of the statistics, we budgeted 513 million for SMME debt relief facility. So we received over 128,000 registration on our SMME SA database. So the number of applications that we received, there were 35,865. And then with the available financial resources, we were able to process and approve 1,497 applications. And so the number of job opportunities that were created or maintained as a result of this intervention amounted to 23,285 jobs. So currently the facility is closed due to budget constraints and oversubscription. So this is just a detailed breakdown per province of the amount that we have dispersed so far. So our disbursements, we are making them on the tranches. So the tranches to date amounted to 302 million. This is covering all the 9 provinces of South Africa, as you can see, they're listed there. So we also have another program that we call the Township and Rural Entrepreneurship program. So the aim of this program is to provide support to SMMEs that are operating in townships and rural areas in order to revitalize the townships and rural economies. So the type of support that is being provided is the issue of networking or purchasing power, wherein we link various SMMEs with various wholesalers so that they can buy at a discounted price because they will be buying in bulks. So we also provide working capital support through a cooler credit guarantee, and also a business development service or business knowledge, wherein we, through our agency SITA, we are providing basic bookkeeping and customer service training. We are also facilitating access to basic business tools, such as instant payment and cashless payment technology. We are also assisting in terms of compliance matters relating to health and hygiene, legal compliance, facilitation of licensing through municipalities, facilitate CIPC, SARS, and UIF registration through our agency SEDA. So this program is about ensuring that informal businesses are accounted for in the formal economy by facilitating registration with various statutory bodies such as SARS, CIPC, and UIF. And then as part of the Township and Rural Entrepreneurship Program, we have a number of schemes, one being the Spaza Shop and General Dealer scheme, wherein the intention is to support 25,000 Spazas and General Dealers. We have set aside a budget of 175 million. And then we also have another scheme, a bakeries and confectionery support scheme, wherein we are targeting to support 3,500 enterprises. And then we have set aside a budget of 100 million. We also have automotive aftermarket support scheme, wherein the intention is to support 15,000 motor mechanics, panel beaters, and auto fitters, and that are operating in townships and rural areas. The last scheme under Township and Rural Entrepreneurship Program is clothing and textile, as well as leather and support scheme. We are targeting 10,000 enterprises there. And then we have set aside a budget of 105 million. So here we are saying that there is approximately about 150 to 200,000 Spaza shops in South Africa, and they are also employing a number of people, and therefore a potential of creating between 300 to 400 job opportunities. So these Spazas are supporting opportunity for self-employment and job creation. As you all know that in terms of the National Development Plan, so it is envisaged that 90% of the 11 million jobs will be created by SMMEs. So the Spaza support program is one of the interventions that the department is putting in place to ensure that we realize the objectives set out in the National Development Plan. So this Spaza shop, they also service local convenience centers for access to basic goods, and they also facilitate. We are also using this to ensure that they are profitable and sustainable and create opportunities for them to be intermediary step to formal economy. So we have bakeries and confectionery support programs here. The aim is to ensure that there is access to market. For example, Spazas, school nutrition programs, hospital and military, as well as other social relief programs. So here we are providing working capital for bulk buying facilities on pre-approved products and pre-selected wholesalers. We are working with a number of wholesalers such as Devland Cash and Carry and Frontline Cash and Carry. So the working capital is also covering account payable such as rental expenses and utilities, the purchasing of operating equipment, and we are also offering here a combination of grant and as well as the interest-bearing borrowing or credit. So under automotive aftermarket support program, so we are intending to support motor mechanics, service centers, as well as motor body repairers. So with compliance, such as trade certification, technical assistance for accreditation to insurance or car service, including government fleet fulfillment of quality requirements, automotive workshop service management training and support. All this will be rendered by our agency, small enterprise development agency, and other relevant stakeholders. Auto space shop fit and fitment centers. So on this one, we will also be providing training and also negotiating discounts. So on closed textile and leather support scheme, here we are focusing on seamstress, sewers, garment makers, and designers. So the intention of the scheme is to provide working capital so that the SMMEs that are participating in this scheme will be able to acquire material, equipment, machinery, and such as sewing threads, pins, and needles that are required to manufacture their various products. And we're also extending credit as well as grant funding to SMMEs that are involved in clothing and textile and leather support. We are also facilitating market access for the SMMEs involved. So this is just a provincial breakdown of township and rural entrepreneurship program. I'm not going to go through it. So in terms of the application process, the first step is to register on SMMES, and then you will be directed to an online application form that needed to be completed. And then all mandatory fields needs to be completed. After that, an SMME will be requested to upload the required supporting document. And then the last step will be to submit application online. So in terms of SMMEs that maybe are residing in very deep rural areas or townships, they're experiencing problems in terms of registering on the SMME SA. They are welcome to go to their nearest SETA branch to get assistance. They must go there together with their supporting documents so that they can be assisted in terms of making the application and online. So these are the contact details that can be used by SMMEs in case they want to know more about our service offerings. That's all from my side, Chair. Thank you very much.
Thank you so much, Mr. Pasha. Your presentation is much appreciated. Thank you for your time, but hang in there, please, as we will have questions for you. In the interest of time, we're moving right along, and our next speaker is from the IDC, and her name is Ms. Estelle Solomons, who's the Regional Manager, Northwest. Welcome, Ms. Solomons.
Good afternoon. For that introduction, my presentation. Yeah. Is the presentation possible?
The presentation is here. Yes, you are slightly. The presentation is here, but it's your last slide. We see your thank you slide.
Okay, let me see that. Apologies. Are we good to go?
Yes, we are good to go. Please go ahead. Thank you.
Okay. Good afternoon, everyone. My name is Estelle Solomon, and I am the Route Manager for IDC Northwest. So today, I will be taking the IDC funding intervention. And at this point, I would like to just thank a productivity effort. Productivity is partner, to the IDC as they provide such a valuable service in terms of creating access to markets for our clients. As we know, it is not just funding that's an issue, but access to market also is a very important issue, especially for our SMMEs. So we really need platforms such as these, and we need organizations such as Productivity SA to assist our SMMEs with access to market. Because ultimately, without a market, you don't have a business. Funding is merely just an element of that. Moving along, So in terms of the IDC, we're an industrial finance institution. We aligned with DTI's industrial policy priorities, the IPAP. We provide funding from as little as 1 million up to R1 billion.
Estelle,
yes.
Estelle, may I please interrupt you for 1 second? There seems to be a bit of a problem with your speaker. It keeps cutting you off, you know, that type of thing. You're not audible.
Hello, can you hear me now?
Yes, that's perfect. That's perfect.
Okay.
Yeah.
All right, so let me
Okay,
start
great
again. Apologies for that.
No, that's fine.
So as I said, that IDC is an industrial finance institution, and we aligned with DTI's industrial policy priorities. We provide funding from as little as 1 million rand up to R1 billion. And our products include debt, equity, guarantees, or a combination of all of these. Some interesting facts and figures about the IDC. We were established in 1940, so the organization is definitely older than me. We are self-funded. So the initial funding came from government back in 1940, but ever since that time, IDC is self-funded. We have assets to the tune of 144.6 billion, liabilities of 49.3 billion. So as you can see, it's a healthy organization. Our credit rating is Baa3, and we employ about 800 people. We also have a national footprint. Our head office is in Sandton, Johannesburg, and we have 20 regional satellite offices. So which sectors do we support? We primarily support the manufacturing sector in the metals value chain, which includes your basic metals, which will be your forging type of equipment, cast iron type of equipment. We look at mining, which is your traditional mining and mining services, machinery and equipment. There we look at the manufacturing of all sorts of machinery and equipment. Automotive and transport equipment. We look at the manufacturing at the various levels of automotive industry, which is the manufacturing of vehicles, the manufacturing of components. And when we look at transport equipment, we look at the types of transport, like, for example, trailers, etc., etc. We don't necessarily do the funding of trucks, etc., etc., but the manufacturing of trucks, buses, and so forth. Under chemicals and textiles value chain, there we're looking at basic and specialty chemicals, chemical products and pharmaceutical products, the whole range of those products in that value chain. We also then look at clothing and textiles. Under agro-processing, we look at not so much the primary agriculture, we look at agro-processing, which means value add, where we then look at how from primary up to the packaging and processing stage can we assist from a funding perspective. A new SPU that we've added is energy, because we feel going forward this is going to become a very strategic and important element in our economy. So we have specifically created an energy department where the focus will be on whether it is providing green funding for green energy or all sorts of other energy type of products. Industrial infrastructure, obviously this underpins manufacturing. So here we would look at all sorts of industrial infrastructure that we can fund, whether it is setting up a terminal, whether it is setting up the necessary building infrastructure, etc., etc. We would then specifically focus on that. Some other areas that we also do funding, which we call high-pact industries, is in ICT, and obviously we look at tourism and media. I saw earlier on the chat there was a question around some digital platform. IDC can possibly look at that, where IDC see media as a strategic element in terms of supporting the South African economy. so definitely that individual can contact us and see whether or not IDC can assist. Now, before I take you through our offerings, I would just like to perhaps set the scene a little bit in terms of where we are from a COVID perspective and what does it mean for the economy. So moving along with my, sorry, before we get there, let me also just speak on some of the IDC focus areas. As you can see, what's very important for us, and all these elements have been built into our KPIs, and that just gives you an idea of how strategic it is for the IDC and how important it is. I'm not going to take you through all of the issues here because I think everybody is quite familiar with that. But the one thing that I would really like to focus on, which the CEO of Proudly South Africa spoke about extensively, is the issue of localization. So from an IDC perspective, localization is also very critical for us. And like I said, it is built into our KPIs. And last year in the Northwest, in fact, we hosted a mining roundtable where the theme of that whole roundtable was around localization. And the objective of that roundtable discussion was really to have a discussion with the mines and understand which of our products and services we can start manufacturing locally. At that time, obviously, because I'm based in the Northwest, the focus was on which products and services can be manufactured from a Northwest perspective. As you know, Northwest is a mining province. I mean, mining is quite a huge contributor to the economy in the Northwest. Therefore, it made sense to then speak to the mining companies and to see how we can then, really create a localized economy. Unfortunately, with COVID, some of these plans have been put on hold, but we've restarted the conversations, where we're then going to take these specific offerings that we have. We're going to speak to the mining companies and see how we can then again, have these conversations around specific products and services that can be manufactured. And I think this is a very important conversation going forward. And from an IDC perspective, the focus remains that localization remains a key strategic focus area. Okay, as I said, I will be building up in terms of just giving you some background in terms of where we're at from a COVID perspective. We are living in very interesting times. And as we know, COVID-19 is most recently discovered infectious disease caused by the coronavirus. It took everybody by surprise. And we didn't know much about this. The first outbreak happened in Wuhan, China, and this happened in December 2019. We are now in almost September, 9 months down, and we're still grappling with this disease. What did this disease do to economy, and just what does it look like in numbers? We know that this is a moving target, so the date of the stats is the 17th of August, so please bear that in mind. But we know worldwide we have about 22 million cases, over 700,000 deaths. But it's also good to know that we've got 14.7 million recoveries. On our continent, we've reached the 1 million mark with just over 25,000 deaths and 842,000 recoveries. As you can see, even with Africa, the recovery rate is quite positive. But the challenge in Africa remains the issue of testing and obviously the credibility of these numbers, because not everybody is testing to the extent that the World Health Organization would want them to. Right here at home, I think we're even closer to the 600,000 mark right now, with deaths in excess of 12,000 and recoveries of in excess of 472,000. Now, what is good about our recovery rate, it has significantly increased. I think it's now currently sitting at about almost 80%, which is good. But the reality of the matter is the virus is still with us, and it is still a major concern, and we need to adapt our lives when we go forward. So let's look at the impact of COVID-19. Like as I said, we didn't know much about this virus. It took us by storm, not just us, it took the entire world by storm. So what has been the global impact on the economy? So as we can see, I mean, right across the world, the lockdown has caused an unprecedented impact. The demand and supply shocks has had a detrimental impact. You can have a look at the growth in industrial production for some of these countries and what it looks like. And it's quite shocking, the impact. You can also specifically look at some of the BRICS countries, what is currently happening there. And we also know that there's been large-scale closure of businesses and job losses. We know that the stock market, it was quite havoc in the stock market. And there's been somewhat stability or somewhat recovery, but still we're living in extremely uncertain times. So what does the economic outlook look like? So economists predict that the world merchandise trade could drop by between 13 to 32%. The world GDP is to contract by 5.2%. Global FDI flows may fall by as much as 40% in 2020. So it really looks pretty grim. And the extent of the recovery is totally uncertain. Nobody can predict or even know what the world is going to look like post-COVID. So that means that we have to come up with, as governments, as countries, with alternative strategies so that we can adapt to what we now call our new normal, whatever that new normal might be in the future. Closer to home, what has been the impact of COVID on the South African economy? We know that it has been devastating. South African mining output dropped by 47%, which is quite shocking because, as I said, mining is quite a big contributor to the South African economy. Obviously, from a vehicle export perspective, we export quite a number of vehicles. That dropped significantly in April when we had the full lockdown. It was minus 97%, May minus 64%, and we had a huge deficit of 53 billion rand in April. So this was as a direct result of level 4 and 5 lockdown. The economy has started to reopen. However, we are still not sure what the recovery will mean for South Africa. We are in deep recession. Our economists are forecasting that there will be a positive turnaround in 2021. They're looking at 3.1%. I think personally, I think that's a bit too optimistic. But perhaps towards the latter part of this year, we will be in a better position to ascertain what kind of recovery or what a recovery can look like for South Africa. But as we know, as an economy, we're in dire straits, and this in particular affects SMMEs to a great extent. Thus, obviously, it has become necessary for us as a country to respond to the impact or to the devastating impact to our economy. And I must say there's been quite an overwhelming response. As you can see, there's quite a number of products or interventions that's on offering. And our colleagues have just spoken. There's a number of relief from government. I'm not going to go through all of this in detail, but there's relief in terms of tourism, sports, arts and culture, agriculture, the SMM debt relief fund that my colleague just spoke about, the Sukuma relief fund, the SMME growth and resilience fund, the NEF, which is a fellow DFI. Then there's obviously the UIF scheme and the SA Future Trust. There's also SARS relief, which one of my colleagues will be talking about later. So having said that, what is IDC's response and what are our interventions to COVID and the impact of COVID? We have 3 products. We have the Essential Supplies Facility, a distress funding facility, and more specifically for small businesses. We heeded the call and the distress of small businesses, and we created a small business distress fund as well. And I'll be taking you through to each individual fund. In terms of the essential supply facility, this facility is specifically for all the critical products and services that was required and that was identified as essential services and essential products. So who may apply? There must be a company with a track record. That means that we cannot fund startups at this point in time. It must be an accredited supplier, and the geographic focus in terms of this essential supply facility is South Africa and within the SACU region. What type of, which products and services? This is not an exhaustive list. You can go to the Treasury Department and you will find an exhaustive list, but some of these products and services include disinfectors and sanitizers, the usual suspects, masks and test kits. Some of the other stuff, we look at safety visors, ventilators and filters. There's also hospital beds, approved drugs, medical gloves. But like I said, this list is not exhaustive, and you can refer to the Treasury Department's list for quite an extensive list of products and services. So what is the salient features of this fund? So this fund is to provide funding to companies that have the capacity to acquire and manufacture products that's needed to treat and curtail and combat the spread of the virus. So it's important that beyond or going forward that we continue to support companies because, like we said, the virus is going to stay with us. We don't know for how long. So this facility will remain in place for as long as the virus is with us. So I think that's an important point to bear in mind. What type of instruments do we provide? It's in a form of a short-term loan for once-off contract or import funding. So the idea of this funding is not to provide a working capital, long-term working capital facility. It's really just in terms of a contract or an order that we can then fund. We have it in the form of a revolving credit facility, and we can also do it in the form of guarantees to banks, and also as guarantees for import and ordering requirements. The financing terms, I must say it's quite attractive for MSEP, which is a facility that we manage on behalf of the DTI. It's at 2.5% per annum. For IDC funding, the trade finance facilities is funded at prime plus 1%, and guarantees is funded at 2% per annum. Moving on to the distress funding facility. Who may apply for this facility? This facility is only for companies that falls within the IDC mandate. I spoke earlier about the sectors that we actually fund. And what is an important fact to notice, and I think similar to ABSA, that the distress must be as a direct result of COVID. And the business must prove that it is unable to service its debt within this period. So again, I want to stress the distress must be as a direct result of COVID. What are the qualifying criteria? I've spoken about the issue of COVID. It must be South African companies. And again, critical, you must have a turnaround strategy that shows how the business will turn around, and the turnaround must be within the next 18 to 24 months. This is a critical element. If you cannot prove that your business will be able to recover, it will be difficult for us to then approve some of this funding. And again, this funding cannot be applied to relieve shareholders and other financiers. That's also an important element to note. And also the funding requirement must be in excess of all the other schemes that I've mentioned in the previous slide. So IDC will then fill in the gap. What are our financing terms and the type of products? We look at debt as well as guarantees. And we also look at scheme-related concessionary pricing. And the pricing will again depend on the risk profile of the entity involved. Some of the exclusions in terms of this fund is normal expansions, as I stated, refinancing of existing facilities, share buybacks, and then payment of non-operational expenditure. Now, if we move on to the Small Business Finance Distress Fund, which is specifically set up for small businesses, if we look at that, who are the businesses that may apply? And again, the key criteria for this fund is that the distress must be as a result of the COVID pandemic. It must be a small business, must have a trading history of more than 12 months, again, so that excludes any startup business. Very importantly, the turnover must not exceed 50 million, must be a registered business operating within South Africa. And again, as similar to the previous fund, there must be a clear turnaround strategy that shows turnaround within the next 12 to 24 months. Excuse me. In terms of qualifying sectors, again, it applies to the IDC mandated sectors, which includes the agro-processing, clothing and textiles, etc., etc. Our financing terms, and I think this is the most attractive aspect of this particular fund, it's prime less 3% for all qualifying enterprises. The minimum loan size is R1 million with a maximum of 15 million per client. And the repayment terms is up to a maximum of 60 months. So I think this is an extremely attractive fund, and we really urge our small businesses to apply for funding with regards to this fund. The traction in the market has been slow, so I think this is a great platform just to make our businesses aware of this and really to make that call to the IDC. As you can see, you know, with prime less 3%, it is quite an attractive fund. What kind of facilities do we provide? It will be a revolving credit facility, a working capital facility with guarantees, and asset-based finance facilities, but only to the extent that it is to aid the turnaround process. Exclusions from this facility would be your financing for normal expansion, refinancing of existing facilities, so we're not going to refinance any other debt with other institutions, and as per normal, your share buybacks and your payment of non-operational expenses. So that, ladies and gentlemen, in a nutshell, it is IDC's offering. So in conclusion, I would just like to say that I believe that this reset in terms of the world, in terms of the economies, I think we all needed this reset button. And as much as the outlook is grim, I do believe in the human spirit. I think we are resilient. And as you can see, that the call to aid and assist has been big. It has been overwhelming, whether it is from government, whether it is from business, whether it is from other finance institutions, and whether it is just ordinary people. I do think that we will get over this, but I think it's important as businesses that we understand what it means to us, and that we also understand the facilities and the interventions that are available, and that we actually reach out and apply for these facilities. So having said that, I would just like to thank Proudly South Africa again for this very important platform. And yeah, like I said, we will get through this, and let us continue keeping on. Thank you very much.
Thank you very much, Estelle, and thanks for those that motivational, parting shot at the end of your presentation. We all need, some bit of good news and motivation to go ahead, as difficult as it may be. Thanks a lot. We will move on to the next speaker, last but not least. And he is Mr. Msizi Wela, who is the Ops Manager, Taxpayer Engagement, Gauteng North, from SARS. Welcome, Mr. Wela. Are you ready for your presentation? You are last speaker, but certainly not least. like I said, after which we will take questions and get answers from all our speakers before we end the session. Thank you. Please go ahead, sir.
Yes, I am ready. Thank you. Thank you, Program Director. As you have introduced me, my name is Msizi Wela, Ops Manager, Taxpayer Engagement, Gauteng North. We are going to speak about the tax relief that SARS has offered as a contribution towards rescuing small businesses due to the COVID-19 outbreak around the world. We'll look at the deferral of PAYE payments, as we all know that most employers are actually unable to make payments to SARS, the PAYE, as because of the issues of unable to pay salaries and unable to sustain their businesses. The outbreak of COVID-19 is likely to result in a large-scale disruption of work due to illnesses, isolation, and quarantine. So small and medium businesses are most vulnerable onto this. So SARS would like to ensure that they rescue such businesses to ensure that they still contribute to the economy and they keep employment to avoid retrenchment. But the businesses that qualifies for such reliefs are small and medium businesses that are making 100 million or less per annum. And they include that you mustn't have more than 20% of aggregate interest, local or foreign dividends or rental from letting of fixed property or any remuneration received from an employer. It must be micro businesses that meet such a requirement. And another thing, there should be no outstanding tax returns for you to qualify, for a business to qualify for such relief. So SARS is saying that, for an example, if you are actually supposed to pay 100,000 a month on your PAYE, SARS is saying that for the month of April, May, and June, you can only pay 65%, and 35% will be payable on deferrals as from September 2020. For an example, if it's 100,000, you can pay 65% of that, and then the remaining amount, you can start paying it as from September without incurring any interest or penalties. So with deferral payments, it's actually like you pay like on installments. This as from the 7th of September. As we know, PAYE is actually payable on or before the 7th of each month. If I can proceed to the next slide, an example, we have like in April, your liability, as an example, if it was 150,000. So we're expecting a payment of at least 97,000, which is 67%, on a due date on or before the 7th of May. 52,500, which is 35% of such amount, can be paid on arrangement on installments as from September. So we are trying to say that this can help you have enough reserves, have enough money to use in order to expand your business or to avoid your business from collapsing. So if you save 152,500 from the liability of 150 in April, and then in May, if your liability, as an example, is 145,000, you save 50,750. So as June, so it means that as a taxpayer, you have enough money to sustain your business, because we know there's been a lot of businesses that could not afford to keep on paying their employees. So we as SARS decided that no, we should offer such a tax relief for businesses to keep on operating. With the skills development levy, SARS has said that skills development levy should not be paid up until August. So from May, June, July until August. So you do not pay any skills development levy, meaning that 1% that you should pay at SARS for SDL, skills development levy, is exempted. So for the business to have enough money, there won't be any penalties when it comes to that. Yes?
Mr. Weller, may I please interrupt you for 1 second? May I please request that you switch on your camera and put your presentation on screen? We cannot see it.
Oh, you cannot see the presentation. I'm sorry about it.
No problem. Thanks. Apologies, everybody. This won't take long.
Can you see it now? Oh.
No, not yet. We can't.
I might be having some technical issues here.
Perhaps we could request that you continue with continue from where you left off, and then we'll just have our holding screen in the background. Would that be okay?
Yes, it will be okay.
Yeah.
So I'm sorry.
Okay, that's no problem.
Issues. Yeah.
Oh yes, we see that. Okay, please continue with your presentation. Thank you.
All right. We are saying that the skills development levy is not payable. So it means that as an employer, you enjoy 100% exemption on the skills development levy. And then we are encouraging employers to employ the youth. So there is another incentive on the ETI, youth employment incentive, whereby we're saying that if you are employing youngsters that are from the ages of 18 until 21, until 29, if you employ such people, we also give you a relief. So for an example, you get a tax relief of 2,000 for each youngster that you employ. We are encouraging employers to employ young people, younger generations. So as going to the slides again, we say that for PAYE, pay-as-you-earn liability, you calculate as 100%, the tax is still due, but you only pay 65% up until the end of August. And then as from September, the remaining 35% that is payable, you request that it's paid on installments. But there are certain exclusions to this. The employer must be registered with SARS by the 1st of March. And there should be no outstanding taxes, meaning that there shouldn't be any outstanding returns for you to qualify as an employer. So there shouldn't be any outstanding return. If you have any outstanding returns, but you have actually made arrangements to pay such outstanding debts, you still qualify. And then for VAT, we are saying that for employers that are actually registered for VAT but required to submit their returns twice a month, we are saying that you can now claim VAT funds up from May until August every month. So meaning that we have actually changed. For an example, if maybe it was your first payment was due at the end of June, we are saying that you can claim as from May, June, July, August VAT refunds, and SARS will make sure that we speed up such refunds to make sure that there is something that is given back to you as a small business. Another thing, as SARS, we are encouraging small businesses to register for turnover tax. With turnover tax, we are trying to help small businesses to ensure that they are taxed on their turnover. They do not have a burden of keeping their records. As long as you know your turnover as a small business, we tax you on turnover tax. But the turnover tax you should register for turnover tax separately. It means that you must be out of the normal tax system in order to qualify to pay for the turnover tax. So with the turnover tax, we do not tax you on profit, but on turnover. So there isn't any burden for a small business to have either a bookkeeper or anyone who's doing the books, like with the checks and balances. You just tell us what is the turnover. But the people that qualify for such kind of a tax type, it's businesses that are making $1 million or less. We still make sure that you are registered for VAT. Initially, when it was introduced, we were saying that you are not supposed to pay VAT. But now we are saying that no, you can pay VAT if you are registered for turnover tax. For an example, if you are making up to 300,000 per annum turnover, not profit, then we charge you only 3% of your tax. The forms are available on our website. It's up to you whether you like this kind of type of a tax or not as a small business. Remember, we are saying that for you to qualify for such relief, you must be up to date with your taxes. Or if you are not up to date, then there must be some kind of arrangements to pay your debts. I think that's enough for my presentation. I'll wait for the questions.
Thank you so much, sir. We appreciate that. Thank you. All right, we will. There's quite a few questions, and we will. I'm not in the interest of time. I don't think we'll be able to answer all of them. But you're more than, if we don't get around to your question, may I please request that you send us an email on info@proudlysa.co.za. We will then coordinate send the questions to the relevant speaker and request that they answer your questions accordingly. There's one for Proudly SA CEO. There's two actually that are spotted. I'll take one. May I please request that you take this one? Has any work been done to understand whether there is a shift in mindset locally to support localization and buy local products, or are South African consumers buying based on price? Are you there, CEO?
Yes, I'm here. Do you want me to take that one? I thought you're taking the first one. Okay.
Okay, sorry. Please, may you take this one? I'll take the second one.
Yeah. So our view, based on the research that we conducted with the help and support of Massmart about 1.5 years ago, pointed to the fact that there is still a gap in terms of consumers understanding the economic impact of their purchasing decisions, and that's what we need to work on. Consumers need to first understand that when they buy locally made product, that there are spin-offs that accrue to the economy, but also that we need to make it easy for consumers to identify these products that are locally made, and that's why if you look behind the program directors. If you look behind the program director, you'll see that you have a banner that shows you the Proudly South African logo and the We Buy Local, message, because it's about ensuring that consumers can easily identify the fact that these products that carry the Proudly South African logo are the ones that are locally made, and those are the ones that they must look out for when they buy. So those are the two things that we left with after concluding that research, that we have to make it easy for consumers to identify the products, but also communicate the economic impact of buying locally made products. And then there were two other softer issues which were important. One was the issue of jobs, that consumers were concerned with jobs and that they were concerned with buying locally made products that were of a high quality nature. And so Proudly South African addresses all of that. I think once we have our campaign, which I showed earlier, reach as many South Africans as possible, then we will start having them hear all those messages, and we think then you will start seeing a change. On social media, though, the conversations that are happening on social media point to the fact that those who are active on social media are now getting it. They initiate the conversations themselves. Even in the absence of Proudly South African, we just jump on the bandwagon most of the time. So we are seeing that it's a matter of making sure that the message is reiterated over and over again, so that consumers can get a sense of what it's about. Thank you.
Thank you so much, CEO. And then moving on, quickly going to the second question for Proudly SA was about the fact that somebody was giving us props for the campaign that is out in the public domain via the TVC, and they were saying it's a great campaign, it looks great on television, great quality, great message, all the good things. Thank you, thank you. We don't take that compliment lightly. We appreciate your thoughts around that, but you're also worried that you want to see more of it, which is exactly what we are working on behind the scenes. So in the next 3-4 days or so, there'll be a massive digital plan, that seeks to spread that campaign and that message. And we're looking at different things, possibly to take it back on other television platforms, just so it lives out there for as long as possible. I wish we had loads and loads of money to be able to really just spread it everywhere. But with that said, with the challenges that we face, we will find ways around it. Thank you. Just Radi Botso wants to know, it's a question for the IDC. What is your definition of youth? What age bracket are you referring to? Estelle?
Hi, Ms. Ngidi. Yeah, I did reply on the chat. Our age range is from the normal youth definition, which is from 18 to 35 years.
Okay, fantastic. Thank you so much for that. I'm trying to quickly go to other questions. I see. Oh, there we go. There's a lot of delegates who would like to have access to the presentations, just so you know that we're making plans to make these available. May I please request that you email lesego@proudlysa.co.za, or you email info@proudlysa.co.za, and we will send you the presentation. I just want to go through to one more question. There was a question for ABSA earlier on. I seem to be technologically challenged, but I will find the question quickly before we close the session. Failing which, if I don't, we will screen grab these questions and we will email them to all our speakers. And with that said, given the fact that we are way over time, we thank you so much to all our speakers. We thank our delegates who joined us this morning. Thank you so much for tuning in and joining us and being part of this session. Thank you to Mr. Oscar Siziba from ABSA. Thank you so much. We are grateful for your contribution and for the fact that you showed up. Thank you so much to Ostepiso from the DTIC. We appreciate your contribution. Mr. Pasha, Philip Pasha from the Department of Small Business Development. Thank you for your contribution. Thank you, Estelle Solomons from the IDC. We appreciate your input as well. Mr. Msizi Wela from SARS, thank you so much, sir. For the first time, now that we're doing this webinar, and this is not a physical forum where we all in one room, I feel that I don't have to hide from SARS. ordinarily I want to hide you in the same room, because SARS is always so intimidating. It's like you owe them something every time you see them. Thank you so much for your contribution. CEO of Proudly South African, we thank you for your contribution, and thank you for your presentation. And that is before I ask the back end to switch off the mics. CEO, your last words, please. Thank you so much. It's a wrap from me. Would you like to say anything, CEO?
Just to thank everyone who joined. I know you went through all the names. I won't necessarily have to repeat all the names, but sincere thanks to all our panelists and speakers. I think the minimal feedback that I'm getting, interestingly already on my phone from those who have joined, is that there is value. I think people are looking for this kind of information. People who are in business, whose businesses have been impacted on negatively by COVID-19, require this kind of information. So we appreciate that you took time out of your schedules to come and impart the information and your knowledge, and just make it easy for them to know what is out there that they can go and apply for. So we appreciate it. We are very thankful to the program director, Ms. Hepingiti. Thank you very much for putting this together, for holding down the fort today, for the team that worked behind the scenes. We appreciate each and every one of you. We know that you've kept us busy with the dry runs. We had one on Tuesday, we had one this morning. Well done. We appreciate your efforts. And we finally can play our video. Thank you. We appreciate that. And to everyone who came on and logged on, we had a steady number of people who stayed on throughout, from when we started up until the end, indicating clearly that there is a need for this kind of information, and that we did not miss the mark when we thought this is information that we must try and put together, get panelists and experts who can come talk to you about it. Enjoy the rest of your afternoon. Thank you. Buy local to create jobs. Join Proudly South African. info@proudlysa.co.za. Buy your COVID-19 portal, your COVID-19 required items, including PPE, sanitizers, etc., off our portal on proudlysa.co.za. Thank you very much. It's a wrap.